A new trading month is underway, and the major U.S. stock averages are struggling to find direction. We got a slew of economic data releases as well as central bank decisions. So here to weigh in on the action is Keith Bliss of Cuttone Co. Keith, glad to have you here today.
Thanks, Remy. Always good to be with you.
Well, we know that the markets are a bit jittery ahead of next week's U.S. presidential elections. We got central bank rate decisions, mostly as expected, and we got some interesting data points out this morning from the U.S. as well as U.K. and China. And of course, we had the Fed rate decision coming out tomorrow and the meeting starting today. But what's the key takeaway so far?
Well, the key takeaway is what you were saying in your lead-in is that these markets are actually well stuck in a consolidation pattern and have been for some time. If you go back, if you were to look at the charts on both the Dow and the S&P, the Russell is there as well. The NASDAQ is not so well formed, but this is a classic, from a technical standpoint, having some technical speak, this is a classic double top that happened in both the S&P and the Dow in the summer with the August all-time highs, and we've just been trending lower since then. And when you have lower highs and higher lows, that means the market's consolidating into a point of decision, which is probably not going to play out in the Dow until December and the S&P probably in January. So that's why you're seeing this really bizarre type of back and forth across the unchanged line from day to day. And again, a lot of that, there's lots of things, reasons why that's happening. A Fed rate decision this week, the U.S. presidential election, which is completely absurd and has been for some time, and that's left a lot of investors off kilter. So that's why we're seeing that. So for me, that's the most important thing to know right now in the markets. We're not going to have a breakout to the upside or a sell-off to the downside anytime soon.
And speaking of price action, I do want to get your take on crude. Now, we've been seeing a fluctuation in prices. Of course, there are fundamentals factors affecting that. But do you think we'll get anything out from OPEC at the end of this month?
No. So OPEC is great at throwing out trial balloons and also talking about their own internal struggles and consternations. I don't think they're ever going to get any kind of consensus. We all know that OPEC does what the Saudis really want it to do in the final analysis. However, you know, the Iranians are really flexing their muscle when it comes to the negotiation table, and they're back up to 4 million barrels a day, and they need to refill their treasury coffers, and they don't see any reason why they need to curtail production. The other thing that I think people need to bear in mind is that if OPEC is talking about any kind of production freeze, it's at its all-time highest level of production right now. So if it freezes at this point, it's not going to do anything to constrain the glut or the oversupply that we still have in the marketplace. They would actually have to reduce production fairly substantially to get it back to an equilibrium that would make oil trade at $70 or $80 a barrel.
Keith, very quickly, I do want to ask you about what we saw in terms of earnings as well as construction spending. That data point did a surprise to the downside, but have you changed your opinion on any sectors in the market?
Well, the one sector that's been interesting to me lately has been utilities. For the longest time, it underperformed and really started to sell off as the notion that higher interest rates were coming. That has suddenly outperformed the rest of the market the last 2 weeks. And the reason it's caught my notice is when utilities severely outperform the other sectors, it's generally a harbinger of a correction coming. Not always, but it's a good rule of thumb that we live by. The other thing outside of equity sectors that I've seen is the relationship between lumber and gold. Lumber has underperformed versus gold, and that's one of those quirky little intermarket relationships that I follow. When that happens, that also presages a bit of a correction coming. So those are really the two things to worry about right now. And if you believe my thesis on that, certainly the cyclical and the discretionary sectors I would stay away from right now.